Welcome back. You're tuned into Trading Hour on CNBC-TV18. And as promised, we are now joined by Varun Lohchab, who's the head of institutional research at HDFC Securities, to discuss some market fundamentals. Varun, good morning. Thank you so much for joining us. Well, it's been interesting last 1 week as far as the market moves are concerned. We had the budget, earnings, and the big Adani group movement that we've been tracking as well. What are you making of the markets right now? And because of whatever we have been talking about as far as the Adani group is concerned, anything that you make in terms of exposure or risk, so to say, for the markets?
I think markets have been largely range bound. If you look at the Nifty, it's been trading in that 400, 500 point range. And from the start of the year, we are down 2-3%, which is again on fairly expected lines. Our expectation for the year was that we'll deliver somewhere between +5 and -10% kind of returns, and other global markets were looking far more attractive, and that's why they have started off on a strong wicket in the beginning of the year. So money is definitely flowing to other markets and other sectors like tech sector in US, which was really beaten down. So I think that country rotation, sector rotation, that seems to be playing out in markets overall. The good part is, I think if you look at the fundamentals, earnings, they seem to be largely on expected lines. There have been no big misses at an aggregate index earnings level in Q3 so far. We are still in the middle of the earnings season, but given some of the heavyweights have delivered good earnings, banks we have seen earning upgrades. IT, we have not seen downgrades like earlier quarters. And some of the other big ones like Tata Motors and even oil marketing companies are okay. I don't think there is a big risk to earning estimate. What is happening is valuations are cooling off from elevated levels, which is, I think, very healthy. And if we just do some more consolidation in this range for next 3 to 6 months in terms of broad 16.5 to 18,000 kind of a range, then that will set us up for for returns in the subsequent period. So net, market keeps grappling with some issue or the other. Right now, because of this Adani issue, we don't see too much impact on the broader, financial sector or overall market earnings, per se. So we are not overly worried out there.
Varun, but what you're basically saying is that markets are building a base and they are likely to do so for some more time, which sets us up well for the future. Any stocks in the broader markets where we've seen a bigger fall as screaming buys, where valuations are very, very attractive?
So, see, frankly, most of the market, we were struggling to find value in any part of the market, for last 2-3 months, because everything was either fairly priced or slightly, overpriced. I think financials is one where probably there is, right kind of valuation. They are fairly priced, given the fact that we are sitting at peak earnings, and even out there, probably things will go down a little bit in terms of sequentially, in terms of earnings as NIM starts to come down. But overall, financials is a good pocket. I think both banks and select NBFCs are looking okay. They can at least hold on to valuations and grow in line with their earnings, which will again be in mid-teens for the next financial year. Infra industrials, again, given the fact that the budget remains on track in terms of capital formation in the economy. The emphasis is very clear that the government priority is on capital formation. So some of the industrials and infra cap goods stocks can be looked at, but again, no, I don't think that they are in deep value zone. They are either fairly priced or slightly overpriced. So you have to be selective. I think it's a market where you have to be very selective, but there are still some bottom up opportunities across most sectors. Like in infra industrials, we have L&T, Cummins as our top picks. In financials, it's ICICI Bank, Axis, SBI. So there are stocks which you can buy from most of the sectors, and the good part is that you have to keep a well diversified portfolio. That's why even while we are not super positive on IT as of now, but we do have a reasonable part of our model portfolio in IT, given it's a high quality sector. So, stocks like Infosys, Persistent, we continue to like them despite some headwinds, which might still be there, around the corner for IT. But I think as long as you're keeping a well-diversified portfolio and doing bottom-up stock selection on basis of, earnings trajectory and valuations, I think we should be fine from a 12-month perspective.
All right, that point is well taken, that you perhaps have to look at it individually on a stock-to-stock basis rather than just take a call on the entire sector. Varun, we leave it at that today. We would have loved to chat some more, but we'll save that for another day. An important story coming in for now. Sources